morning, good evening, good afternoon, wherever you are today. Welcome to our December webinar on finance fundamentals for smarter revenue cycle management. Before we start, just a couple of things. House rules, please make sure to keep your mics on mute, just so we can make sure that our webinar runs smoothly and avoid any distractions. I'm also just gonna quickly share um, this group site that you should have access to. Just give me a second. I'm just gonna share that. Just give me a sec. Sorry, I lost my, there we go. All right. So I am Jess, for those of you who are just meeting us for the first time. I'm part of a team that manages Synapse learning software, or LMS. Once you've registered, you should have access to this group site, and this will give you all of the resources that you need with regard to the webinar for today. We also have some activities right here that you're more than welcome to go through. You can do this after the webinar, or just if you want to explore what our LMS could do. We'll be placing the recording here afterwards as well. And the resources, the handout that our speaker will present today will also be placed in here. So feel free to explore this. This is free for you to use. This is resources, anything that you need to know about the webinar for today. And really, we have like these small activities that you're more than welcome to explore. All right, I am going to stop sharing so that our speaker for today can also prep her slides as I speak. So again, welcome and thank you for attending our webinar for this for today, called Finance Fundamentals for Smarter Revenue Cycle Management. So in this session, we'll break down the difference between bookkeeping, accounting, and finance, how each one affects your revenue cycle, and you'll also learn how to read key financial statements in a healthcare setting and explore simple automation strategies to improve accuracy and efficiency. Our speaker for today is Ms. Iris Matanggihan. She's a seasoned finance and accounting professional with over 25 years of experience across financial planning, audit, taxation, compliance, and full cycle accounting operations. That is a mouthful. She brings practical, real world insights on streamlining financial processes for better performance. So please join me in welcoming Iris Matanggihan. Hi, Iris. The floor is yours.
Thank you, Jess. Okay. You see my screen, right? Okay. A pleasant day, everyone. Welcome to this webinar on Finance Fundamentals for Smarter Revenue Cycle Management. The healthcare industry is very unique, and so as accounting has its own unique language. It is critical to bridge the gap, as communication is the key in any client service provider engagement. We have to ensure that financial communications are highly satisfactory, and we address any misunderstanding in gray areas. Synapse would like to help its customers at least understand the basic concepts of accounting and finance so we can work together in building and growing the business. For the operations group of Synapse, we need to emphasize the needs of our clients and how our efforts are aligned with the client's financial goals. Okay. For today, I'd like to share what we in Synapse Accounting Services Group do for our clients. You may notice bookkeeping, accounting, and finance are used interchangeably. We will tackle the activities covered by each of these three different areas. We will try to understand where bookkeepers, accountants, and finance analysts fit into the revenue cycle management ecosystem. Financial statements, of course, reporting is indispensable in any business. We will discuss the key reports that aid business process owners and decision makers. We will also try to identify tools that can help streamline accounting and finance activities. If you're a provider looking to improve revenue outcome, reduce inefficiencies, and lead a more financially agile practice, this webinar gives foundational understanding to drive smarter strategic decisions. For RCM leaders on billing operations, this session can help sharpen your financial edge, equipping you to drive outcomes, not just transactions. For Synapse, here we integrate accounting services directly into RCM operations. We do not just balance accounting books. We help obtain real-time financial visibility to make smarter business decisions. For billing and accounting, we do invoicing, customers, and reporting. We do bank reconciliations, credit cards, basic financial statement preparation. We also assist on tax-related matters. For payroll, we verify data and inputs into the payroll system while we also do audit and reconciliation on each payroll cycle. We also have controller services. It's more on financial management reporting and analysis. We do calculate key performance indicators. For CFO services, we help develop our people's business acumen so we can assist on planning, budgeting, and forecasting, as well as on internal controls to mitigate risk and prevent fraud. We also create accounting policies and procedures and also assist on revenue and cash flow management. We assist clients in identifying tools and software suitable for their business. Hold on. A group of health companies that we assisted, we do payroll recording, we process vendor invoices and expense reports, we do bank reconciliations, credit cards, we do financial statements extraction and analysis, and we document processes to support scalability and control. We did assist a startup, Pulmonary and Sleep Center. We help in setting up their accounting software. We streamline transmission of financial documents, improve the document workflow. We also help in the timely bookkeeping of transactions in anticipation of the month-end close and financial statements generation. On a higher level financial strategy, we support automation. We did help a client in creating a pricing model. We did an FTE review dashboard tool to help client in allocating its human resources and scale without sacrificing accuracy and efficiency. I have a quiz here. What is the accounting equation? A, debit equals credit. B, revenues less expenses equals net income. C, assets equals liabilities plus equity. D, none of the above. You may type your answer in the chat.
Yeah, thanks, Iris. Yeah, for anyone who wants to take a guess or answer, type it in the chat. There's a letter C. Do you see the answers, Iris? I think people are answering letter C.
Yes, the correct answer is letter C. It's assets equals liabilities plus equity. So this is the basic accounting equation which I'd like to share so we have a better understanding of the accounting and finance world. Assets are the company's properties, could be tangible like cash, land, building, or machinery. An intangible asset example is a software. Liabilities could be obligations to the company suppliers or a loan for purchase of major equipment. Capital represents the owner's investment, or what we also call the net worth. The double entry accounting system. So we use debit and credit, which literally mean left and right. However, in the accounting equation, there's a functional meaning when we say credit to revenue, it increases income. Credit to expense is a reduction. As a bookkeeper, it is important to understand the double entry system, which simply means every debit has a corresponding credit. This system is used to maintain the balance of financial records. In the revenue cycle management world, when we recognize the service to the customer, we debit accounts receivable and credit revenue. Upon collection, we debit cash with the corresponding credit to close that accounts receivable. So let's define these three different areas. Bookkeeping is more of routinary encoding. It involves gathering and organizing documents as basis for recording transactions. A bookkeeper is trained to use the accounting software. The accountant trains the bookkeeper, and he develops himself as an expert on preparation of financial statements and tax returns. He does audits, ensures completeness in recording of transactions. With existence, he ensures that each recorded transaction actually occurred. He is the main point of contact for the business, owners, employees, customers, vendors, banks, even legal and tax authorities. Lastly, the finance analyst focuses on the interests of the owners. He helps in managing the assets and liabilities, planning for future growth, creates financial models, and reporting dashboards. A bookkeeper focuses on the financial records and ensures accuracy. An accountant ensures compliance with generally accepted accounting principles and international financial reporting standards. He is more involved in assessing risk, identifying internal controls like proper segregation of duties and approval process. Finance analyst is more forward looking. He sees how historical transactions would impact the company's performance and financial position. So in the revenue cycle management, the bookkeeper simply creates and releases the invoices. The accountant reviews contracts, ensures accuracy of invoices, and tracks aging of receivables. So he's more involved in making sure that revenues are converted to cash. The finance analyst reviews the pricing and conducts revenue analysis to help the company in growing the business. Any questions? What are the types of financial statements? Mm, any idea? What are the different financial statements that we use? Okay. Yes, we have balance sheet, of course. We have profit and loss statement, the statement of cash flows, statement of changes in equity, and the notes, of course, to the financial statements. Let's differentiate first cash versus accrual in terms of presenting the financial statements. Cash basis is simple and straightforward, more often used by small businesses or sole proprietorships. Accrual is more complex, but it provides a more accurate picture of financial performance and position, as it entails proper matching of revenue and expenses on every period of operations. The profit and loss statement shows the financial performance and profitability for a specific period. We have there the revenues or gross income, the cost of services or cost of sales. These are the costs directly related to generating the company's revenues, such as manpower or materials. Okay. Operating expenses or overhead to support the business. This could be office expenses, advertising, and other expenses indirectly related to operations. The balance sheet is the financial position. It shows the final position with the accounting equation: assets equals liabilities plus equity. The balance sheet accounts accumulate all transactions since the start of operations. It is critical that all accounts in the balance sheets are 100% reconciled, meaning each account has accurate breakdown. The statement of changes in equity, it shows the owner's interest in the business. We have there the capital or the owner's interest. The retained earnings is an accumulation of net income year on year, which is the source of dividends to be distributed to the owners, of course, subject to availability of cash. We also have the statement of cash flows, which shows the inflows and outflows during a specific period. There are three main sections of the cash flows. The cash provided by or used in operating activities. These are revenues and expenses. Second, we have investing activities. This may be capital infusion or property acquisition. Financing activities include stock issuance to generate more capital, borrowing from banks or third party, as well as dividends. What are the tools in finance and accounting? For small and medium enterprises, very famous is QuickBooks. There's a similar software, Xero. For large companies, they use Oracle or SAP. Some use NetSuite. I think it's customizable, NetSuite. Of course, Microsoft Excel, we use that day to day for data manipulation, for analysis and reporting. There's also a various procure to pay or P2P systems, which is an end-to-end process of managing the cycle of acquiring goods and services from vendors. It starts from requisition, sourcing, issuance of purchase order, delivery, and payment. The order to cash, or yes, what we call the RCM, it's an end-to-end process of orders from customers, managing the contracts, billing, and collection. Customer satisfaction is the key goal of the O2C system, while ensuring that revenues are converted to cash on a timely basis. If you've heard of Zoho, it is a unique and powerful software for businesses of all sizes. Microsoft Excel. This is not the tool is not used only for arithmetic operations. We also use it for analysis, right? We have VLOOKUP, a famous formula which is used to match data among tables. E-formula is used to return values based on a condition, if true or false. In advanced Excel, we can do nesting or combination of various formulas for more sophisticated automation. Pivot is a very helpful tool. We can filter, sort, and calculate. We also use that in Google Sheet. For advanced Excel users, they use Visual Basic Programming, which automates tasks within Microsoft applications, not only Excel, but also Microsoft Word and Microsoft Access. Excel streamlines repetitive actions, the Excel Visual Basic Programming, and it automates sequences of the commands. Those are just some tips for you guys to explore on Microsoft Excel. Database management is a key foundation in any RCM efforts. For medical and dental billing, we use practice management system for managing patient demographics, scheduling appointments, patient registration, and tracking financial transactions to initiate the billing cycle. We also use electronic health medical record systems um, to store data regarding patient visits, diagnosis, and treatments. These are clinical documentations necessary for accurate billing to patients. Other softwares, we have contract management, AR and collection softwares, patient engagement platform, insurance claims tools. We also have business intelligence and analytic dashboards. Okay, I think that's my last slide. Would you have question?
Thank you,
Are you ready?
Iris. Yeah, we're gonna open up this time for any questions. We have a couple of minutes left for any questions you guys have. Just type it in the chat box and then Iris can answer those questions for you. Yeah. Iris, just to let you know, I'm not sure if you're aware your video's turned off, just in case. Oh, and we also have a survey right here. If you guys could answer that, that would be great. And feel free to suggest any topics that you would like us to cover moving forward. We'd be happy to get your feedback on that. All right, we have a question right here. Okay, for RCM leaders unfamiliar with interpreting P&L or balance sheets, what are the red flags or trends they should regularly monitor?
I would say first is one is unexpected margin drops. Margins declining unexpectedly on key service lines could indicate pricing issues or rising costs. Second is unusual jumps in liabilities such as deferred revenues or unexpected credits, signaling billing reversals or write-offs. Another one is cash flow discrepancies between the balance sheet versus the profit and loss statement, widening the gaps between net income and actual cash flow, which may point to AR or accounts receivable collection inefficiencies.
Thanks, Iris. We have another question right here. When entering expenses and scanning the invoice, do you attach the two for auditing purposes? Do you
Yes.
have report timing for month? Sorry, I'm just going to follow that up with, do you have report timing for month end result?
Hmm. Yes, it is critical. It is very important to attach documentations for every transactions. That's why it's helpful that we have QuickBooks, like QuickBooks here. We can attach documents there, and then the timeline. Well, in terms of recording transactions, ideally it's recorded real time, and then on month end we just have to review, and I think the earliest that we can close financials is within 5 days for for small companies, but normally 10 days is good to close the month end financials for a company.
Thanks, Iris. Any other questions? We have 4 minutes. All right. Any practical advice on implementing automation without overspending?
When it comes to automation, the key is to start small and strategic. First, focus on high volume repetitive tasks like eligibility checks, payment posting, or denial categorization. These offer the fastest ROI or return of investment. Avoid over customization in the early phase. Uh, Use what the tool offers out of the box and adjust only if there's a clear need. Thirdly, leverage what you already have. Many EHR and billing systems have built-in automation features that go unused. Also, we can involve end users early, so you don't need to invest in tools that don't match real workflows. Lastly, measure impact early, track time saved, error reduction, and cash flow improvement so you can justify further investment. The goal is not to automate everything. It's to automate what matters most with a clear path to value.
Right. We have another question here. How do you handle the issues of ERAs versus bank reconciliation? As far as what is included in the month-end reporting, sometimes the funds don't hit the bank statements until after payments are posted.
ERAs. Sorry, can you what is what's ERA?
I think we can ask Michael, would you like to unmute your mic right there? Oh, electronic remittance advice.
Yeah. Okay. ACH.
Yeah,
Okay.
Please go ahead,
basically
Michael.
when you get ERAs at the end of the month, a lot of times you can be posting the payments such that your practice management system says there's one set of funds received in the month, but the bank statements don't. And just
Right.
curious how you guys handle that situation.
So
Uh,
the ACH or the remittances do not
Mhm.
match with what you receive
Right.
in the
When it
bank statement.
actually hits the account, correct?
There's an advice, right? There's an advice from the payer saying that we've moved the money, but when you check your bank account, it's not there yet. Is that right, Michael? Is that what you're saying?
Exactly,
Right.
exactly.
It could
And
this
typically in the past, you kind of had a little bit of a choice because you actually deposited the funds, so you could, whatever you
Right.
didn't get entered into the system, or you could hold the month end close.
Right.
But if you want your month end to tie to your bank statements, which a lot of
Right.
doctors do, you've got to make that call in terms of, do you
Right.
post it if it hasn't hit the bank yet,
Right.
basically.
it could just be timing difference, Michael. I think let's say at month end, sometimes it would take like probably 2 days
It's
to.
right, exactly.
Yeah. So maybe I could answer that, Michael. So since for the payment posting on the Synapse side, what we do is we try to get a copy of your bank deposit every day. So until we see that the deposit is not in your bank account, we do not post the ERA advice or EFT advice for that matter.
Gotcha.
We don't we don't post it. So you balance with your bank account. We only post what's already in the bank.
Oh, okay. That makes
Okay,
sense.
so that's the way we would make sure that it balances with your bank account.
Couple other quick questions. I know we're running out of time. Do you do depreciation as part of your bookkeeping service or part of your accounting service?
Depreciation for
Yes. Is
asset.
that just a line item for bookkeeping? Is it a more of an accounting function?
It's an accounting matter, Michael. So we often use or create or establish the lapsing schedule. So we make sure that assets are managed properly, and then we have to track the usage of these assets and of course record the depreciation and monitor their book values.
And then if practices want assistance with budgeting, is that your financial analyst service? Is that the accounting service or what?
CFO.
It's actually for budgeting and forecasting, the accountant and finance analysts are working hand in hand, or
Okay,
sometimes or sometimes it's just the accountant, or yeah, who does the
okay,
financial analysis to make sure that historical transactions are plotted in our budgeting or forecasting template, so we can um, come up with guide for the management to make its decisions for the business.
awesome. Thank you for your time.
Thanks, Michael.
Thank you.
All right. That wraps up our session for today. I think our next one will be next year. The next month, we'll keep you posted on. Thank you, Michael, for your question. Thank you, everyone, for attending for today. And we will be sending you a copy of this recording and the handout as well um, in, in the next few days. So thank you so much and have a good rest of your day, everyone.